Hi, this is Zak Mir with the Share Talk Bulletin Board Heroes on Tuesday, the 26th of June. Starting off with 88 Energy, which continues to be a big bulletin board stock. We've had the bear trap, double bear trap from below the 200-day moving average of 1.69 pence. That's the black line there, so that's a positive. Also bouncing off the bottom of this broadening triangle from October, so that's looking good as well. Probably the only thing missing here, really, if you're a bull, would be an end-of-day close back above the old May support at 2 pence, just dithering slightly and just leaving the chance that there'll be a bit more consolidation between 1.5 pence and 2 pence before the shares get off the ground in a sustained way and head towards the target we've been waiting for, which is 3 pence plus. On to AEG, which is the ticker code, and Active Energy, the name of the company. Nice solid candle there for today so far, with a bounce off the floor of this rising trend channel after the stock tested old resistance, basically as new support around the 3 pence level. What we want to see now really is a bit similar to the 88 Energy situation, recovery of former support, which in this case is around the 3.7 pence level, the initial April support, and or a break above the 50-day moving average of 3.93 pence. Take your choice depending on your risk appetite, but we do have bullish divergence here, so I'm sure that some aggressive traders are already long and hoping that that is the end of the pullback from March around the 5 pence area. More obscure stock here coming from in the form of E-therapeutics. One of the things that have worked quite well in the latest iteration of the Bulletin Board Heroes over the last month or two has been following stocks which got a wedge pattern, a falling wedge pattern on them. This is what E-therapeutics has at the moment, and in fact normally one can even jump the gun in terms of calling them higher when we have a falling wedge, as we do here from November last year. I just want to see an end-of-day close really above the 7.7, 7.8 pence level just to clear this recent post-April resistance, but we can do that over the next day or two. The target here towards 10 pence plus, which was the initial 2018 resistance. Obviously, we wouldn't want to see the shares back below 6.5 pence, which would be the notional stop loss area. Stock which has been offering a rather horrible ride in the recent past is Innovaderma. Looks as though we might have some attempt at basing here in a consistent way. We've got this uptrend line from March, which is normally at 100 pence, so that's a stop loss, an obvious stop loss if you're interested in this situation. Also got an uptrend line in the RSI window as well, which has been multi-tested. So just the first signs of a lasting recovery here. Probably want to see 120 plus on an end of day or weekly close before getting overly enthusiastic, but we've got the 50-day moving average of £1.15, and we can recover that relatively quickly. Then one would be quite optimistic that the shares can head towards support on the way down around the £1.80 level. On to a stock which is a favourite of mine, and largely on the basis that it behaved from a charting perspective, Independent Oil and Gas. Consolidation here at the moment. Probably want to see an end-of-day close back above 30 pence to take us up to the implied 45 pence target at the top of a rising October trend channel. Stop loss back below 25 on a technical basis at this stage. Finishing off today's slightly flat fare with a stock which has literally offered a U-turn, Mediazest, a U-turn over the course of June, back above that gap as well. The gap, bottom of the gap there, 0.1. So as long as we can stay above, 0.14. As long as we can stay above that, maybe clear the 50-day moving average of 0.15. One would hope that there could be a retest of the best levels just in December around the 0.25 level over the next couple of months. That's it from me. More updates at the same time tomorrow.